Ever felt like the world's economy is on a roller coaster and you're just trying to hang on? Well, you're not wrong. We're seeing some serious rumblings in the global markets, and a lot of it has to do with two major forces: the insane boom in artificial intelligence and the big warnings coming from central banks. Stick around, because we're going to break down what this means for your money and your future. Recently, the Bank of England dropped a pretty heavy report, and it's got everyone talking. They've put a giant spotlight on the sky-high valuations of AI companies. Think about it. Some of these tech giants have seen their stock prices explode, driven by pure AI hype. The bow is basically waving a red flag saying, "Hey, is this growth real, or are we floating in a bubble?" They're also pointing to growing credit risks and the potential for a big, painful market correction. It's not just them. Major news outlets like Reuters are echoing these concerns. Central banks are worried that if this AI bubble bursts, it could shake the entire financial system. It's a classic case of what goes up must come down, and they're bracing for impact. So why should you care about some report from a bank across the pond? Because what happens in these big markets doesn't stay there. This is about overvaluation. When a stock's price is based more on excitement than actual profit, it's a recipe for disaster. If a correction happens, it won't just be the big AI players that get hit. The shockwaves could ripple out, affecting your stock portfolio, your retirement fund, and even the cryptocurrency market. We saw a smaller version of this with the dot-com bust. A sudden drop in tech stocks can cause a chain reaction, making credit tighter and spooking investors everywhere. This isn't just about stocks. It's about the stability of the entire financial ecosystem. Let's bring this down to earth. What does this mean for real people? If you're an investor, your tech-heavy portfolio could be at risk. That stock that's been your golden goose might suddenly lay a rotten egg. For business owners, a market downturn could mean it's harder to get loans, and customers might spend less. And for everyday folks, this could impact job security and the overall cost of living. When markets get shaky, companies get cautious. They might slow down hiring or even start layoffs. The key takeaway is to be aware. Don't get caught off guard by headlines screaming about a market crash. Understanding the risks is the first step to protecting yourself. Okay, so what do you do if you're invested, especially in tech? The first rule is simple: don't panic. The second is even more important: diversify. Don't put all your eggs in the AI basket, no matter how shiny it looks. Spread your investments across different sectors and asset classes, like bonds, real estate, or even international stocks. This is basic risk management. Review your portfolio. Are you too heavily concentrated in one area? Maybe it's time to rebalance. And please, avoid chasing the hype. Buying a stock just because everyone else is can be a fast track to losing money. Smart investing is a marathon, not a sprint. So what's next? What's the outlook for 2025? There are a few possible scenarios. First, the pessimistic one. We could see a significant market correction, where those overvalued AI stocks come crashing down, dragging the rest of the market with them. The second scenario is stabilization. The hype could cool down and prices might level off, allowing company earnings to catch up with their valuations, the most optimistic scenario. The AI revolution is real, and these companies will grow into their massive valuations, leading to a continued, more fundamentally sound rebound. The truth is, it'll probably be a mix of all three. Some companies will fail, while others will genuinely change the world. To wrap this all up, the message is clear. We're in uncertain times. The AI boom is exciting, but the warnings from central banks are serious. The best thing you can do is stay informed, be critical of the hype, and make smart, diversified decisions with your money. Don't let fear or greed drive your choices. Knowledge is your best defense against market shocks. Thanks for watching, and if you found this helpful, be sure to like and subscribe for more insights to help you navigate our crazy economic world. Stay safe out there.